Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Monday, the 12th of April, 2021. So here we are, we're after 6:30 at night. You're up a bit in the stock market. Earnings season kicks in. We got the banks reporting. The big boys come in on Wednesday. We have CPI numbers coming in tomorrow. Pay attention to those. You're going to get some sales numbers that are coming out. I would assume they're going to pick up because people got those checks. We're hearing a lot of talk now in the market. How is the Biden program going to pay for things? And as President Biden said, you know, he's willing to do an electric vehicle charge. He's willing to do a 5 cents a gallon on gasoline. There's different things, but it won't bring in the kind of money that he's looking for in these trillions of dollars. That's going to come from a different type of tax eventually, and that's going to be the battle that he has in Congress. At the same time, we are still fighting a very bad strain of COVID. It's another one. And, you know, it's taken Michigan by storm, and we have to be fearful it's going to spread elsewhere. And if it does, be careful. They are now talking and being asked. The CDC has recommended that Michigan close down the state, shut it down again, go into several weeks. Even if they got the vaccines they want, it takes 2 to 3 weeks for them to become effective. It won't help the situation right now. What will help is closing everything in. Why won't they do it? Think of the word, it starts with a P. What do you think that word is? It's called politics. Speaking of politics, before we get into the market, I started laughing. Nikki Haley, and you know, she's very well known, obviously, said today she won't run for president in 2024 if President Trump decides to run again. Well, that must mean to me maybe she's going to get the VP nomination. That could be a big nomination for her. Remember, he's going to be older, blah, blah, blah. Number two, maybe if he doesn't run, she gets an endorsement because she's playing the game there. So whatever the case may be, it's the first one I've heard come out this early. Interesting, okay? As we look at the marketplace, the stock market tried several times today to break, didn't do a very good job with it. We keep hitting new all-time highs. You're getting up there in some of the stock indices. The dollar's still somewhat weak. You can see a number of currencies are railing against it. Bonds and notes held on fairly firm today. The trade deficit came out, went up only 454% from the same quarter a year ago, but so what? It's not a number that matters, and don't get me wrong, it's big numbers. They'll matter to our kids. What it doesn't matter on now is they're going to keep spending to get out of the COVID situation, then they'll look at the numbers. That's all that I mean by it. Energy markets sort of stable here. They're waiting for API, EIA numbers, and of course, these COVID situations, depends what happens. UK opened up today. So other than restaurants going to full capacity, which they can do as I understand it on May 17th, it is a boon. You got retail shopping. Life's come back to London and other cities. Very important. So as we look at the S&P, one of the things that I always do is I want to know where the momentum of a market is. What's the bias also? Well, bias is easy to define. I divide it by looking at a line in the sand. Now, you might pick an 18-week moving average closes. I know some of you like a 20, a 21. I frankly don't care what your number is. As long as you have something that defines for you where you should have an upside and a downside bias. If the market's over that number, it's a filter for your thinking. That's very important. If you don't develop these filters, you're just going with the mass, well, I wish you the best. I know how that typically ends up. If you look at the S&P, now remember, this is how you've looked. You've been over that average this whole time. You're not thinking of trying to trade these breaks. You're trying to buy these breaks as long as the bias is staying up. In addition, you've got a pattern of higher lows, higher highs. Would you call that bullish? I would. You're over the 18-day moving average. That's bullish. But this average is pretty far away from the market, which tells me that even if you got under 40, 50, 650, there's a big gap in there. You got another 50 points down to this number, and that's already tonight's number because you're open. So this, while it's nice in a textbook fashion to be support, would you really want to risk that kind of money back there? I doubt it. Where's the resistance? It's defined itself for you. It's the upper Bollinger Band. You only stay above this black dashed line or below it 5% of the time. Now the lines can either be going sideways like they did here, or they start in a trajectory. There is a way that I teach to catch an idea, are you getting a breakout to the upside or not? This market just keeps moving, and it's called the gorilla glue trade, but it's bending away from it. What do I mean by gorilla glue? It's that once it latches onto it, it doesn't want to let go of it. You can see it began right here and then here. That was the breakout numbers, by the way. Those 2 days, that was your breakout. And until you take out this low, I think the pros are just jumping on this market right there. And that's exactly what it's done. What goes hand in hand with that? We always look at where the slow stochastic is. And the slow stochastic embedded. Now, the slow stochastic, think of MACD, relative strength index, Williams percentage R. I can go on because I've learned all these things over the many years. And they're all momentum indices. Each one does something and measures momentum differently. This is my favorite for many reasons, and I teach it in my charting course. But when this locks in, it's called embedded. I don't know what better word, I made up that word going with it. Until it loses that red line under 80, it tells me the pros are buying. And they're buying the pullbacks in the market they really haven't had anywhere. In my enhanced Bollinger Band course, I teach how you come in off of this gorilla glue trade. So I'm not going to go through it here. That's why I create the courses. When you look at the NASDAQ, same thing. Up and away, bullish as can be. Embedded reading. Until you lose the embedded reading, in a nutshell, I remain in the bull camp. Same thing in the Dow. And look at how the Dow keeps going. So I let traders decide what they want to do, but in my eyes, I'm looking for opportunities to get in, basis the embedded course that I showed, and it's got all the rules. There's nothing hidden there, so everything's there. So if you're a fan of Bollinger Bands, and I think you should be, 13 chapters will teach you an awful lot. All right, the Russell is not in that game. It's got higher lows, but then it's got lower highs, and it married itself to the 18-day average. Whatever the reasons, I'm not smart enough to know. I'll let the stock market analysts do that, but it was evident. So I get so many traders that will go, well, this market's going to catch up to the others. Sure it will. There's a reason it's down here. When it's its turn for a rotation, you'll see it. It's not here. In the meantime, what's happened is the Bollinger Bands are squeezing in on it. So you're going to develop one of those psychiatry trades again where you think it's breaking out because the others have gone and you get yourself caught. In the VIX, you still have the embedded reading. The market, as I told you, I think the pros went short this market around 17.29. They're out about 30 cents on the trade. I think they're looking for the 18-day average of closes. I think they're still in that trade. And how they did it is they don't go short the VIX. They'll play puts typically. And what they'll do is they'll decide how much delta they want. So when they're writing it, do they want to be 1-to-1? Do they want to buy themselves time? What are they trying to get done? Each person has a different idea on that. In the 30-year bond, well, first thing is you're in an overbought market with readings in the 70s. Second thing, you've had an uptrend, but don't you notice the sideways action that you've stepped into? That's not what the market was doing from the first of the year on. The game has changed. And the mouse moves. Remember that? How the mouse moves from room to room? Well, it moved on you. And now you've got a different type of market. It's more of a market that's in a sideways spin than it is a market running to the upside or the downside with any authority. When I look at the 10-year note, not too far away from there, a little broader band, higher lows, maybe lower highs developing, flat momentum, just sort of stuck right here. Maybe waiting on the earnings reports, maybe waiting on what Fed Chair Powell's going to say this week. Yes, he is speaking again this week. I think it's Thursday, and we always want to listen. But let me tell you what he's going to say before he says it or writes it. He's not going to say anything different than what he said on 60 Minutes because there's no reason to. He's not going to say anything different than he said at the last FOMC speech right after the meeting. Why? Nothing has changed. They're going to hold the pattern. They're going to wait. They think that everything in inflation's transitory. They're watching. COVID is still a big unknown to them. Blah, blah, blah. They're going to wait. Dollar index in a downtrend. So the market's downtrend. Now the market is having trouble suddenly with the 200-day moving average, but it's very oversold. Trying to make a market oversold with this type of reading to embed is very difficult. Not saying it can't happen, but it's difficult. Should the market decide to pursue a big drop from here? 91.59 could be the number. That number's moving, by the way, at about, if you look at this, let's see, there's 4 points, 4, in the neighborhood, and then it jumped from 43 to 58. Let's assume 10 points or so a day. So it's probably going to be somewhere in the 91.60s, high 60s tomorrow, maybe near 91.70 for the first support, if it gets there. If the market takes out 92.43, which is under the 92.51, you'd end up with a pattern if you don't take out 90, actually, when looking at today's low, you cannot get anything that turns this market bullish. You got a lower low, lower high, and even if you rally up, you have a lower low and then a higher high. As I look at this chart, it can go neutral. It's oversold. I don't think you're attracting a lot of new shorts. In the eurocurrency, you're overbought. It's the flip-flop of it. So you have higher lows, higher highs. That's all bullish. Tonight's high at 119.31.5 hasn't taken out that high yet. But do you attract new money once you've gotten there? The money was made here in a contra-trend move, a short covering move that embarked itself where? Remember the embedded reading, and once you lose it, what I tell you? Once it's lost, if it's not gotten back like that, the odds favor this market's going back to that 18-day average. It went there right away. It's not typically the case, and now you're sort of stalling out. Okay, let somebody else trade it. I don't care. In the British pound, what's the pattern? A lower low and a higher high. Is that a trend? No. What's the market? Well, if you look at the readings, they're both above 30, so it's not oversold, but there's no trend to play with. What the market went back to and found support against was the combination of the 100-day average, and if you go further back on this chart, and if you look at that, it's an important average. And so it looked at a long-term average. It liked what it saw with the combination of the Bollinger Band under it, but it hasn't flipped itself into anything bullish yet. Bitcoin. So if the market's going to continue up, and it's not in a trend here that I see that one could easily trade. It went up today. What number did it challenge? Well, 61,945. The Bollinger Band, 62,163. Didn't quite get there. Backing away from that number. But you got higher high, lower low, and you're overbought. What else? You're now in that sideways pattern. We know, is it Coinbase? They've got their IPO coming out. Once they become something that's important to the market, and they will with that IPO, well, then the SEC is going to look at them again really hard. Okay, so there's more things happening. We've also heard about the digital yuan. I'm reading stories already. Bitcoin's going to fade away because of the digital yuan. Okay. Nothing that I know of is going to make this market fade away because of what? People like it. They also realize there's only going to be X amount of million of these that can be mined. The cost of mining them is so large right now that there aren't many being produced. That's the reality of the situation. That's what you're dealing with. But when the asset class, for whatever reason, runs its course, it could be a permanent asset class, it could be a fantasy, I don't know. I just know it's a market that people like, so I follow it. And by the way, I don't know anyone that trades it in the futures market. You do understand the margin is like 42% or 50% of the value. So to trade one contract, you have to have about $150,000. What makes it worse, you'll say, well, let me have some swing play in my account during the day. Okay, and it moves $3,000 to $4,000. I'm telling you, this is a game for the well-heeled pros and for the funds and so on that want to trade. I don't think it's for the retail client. They've got to make a really small contract to get that working. In the Brent, and I'm talking a small contract in the size value, the face value of the contract. Brent versus WTI, well, as long as you stay over that 18-day average, you know, I'm going to tell you, I think Brent's going to be stronger. You tell me the number the market keeps running up to and fighting. It's right there in front of you. The near-term trend has higher lows, higher highs, but it's staying under the 18-day average. Right now it's neutral. We get the API numbers in the afternoon, EIA right after that. WTI crude, same pattern, higher lows, lower highs, right into the 18-day average, not doing much, and volatility has come out of the markets. Rebob gasoline. Well, if you come back to this high right through here, that high was 201.08. The rally high now hasn't taken that out, so you still have lower highs, lower lows, right into battling at the 18-day average. And right above you at 201.59 is the upper Bollinger Band. You may think it'll bust right through there. I don't, but I am bullish longer term. So you put it together, you try to come up with game plans, and that's what this whole business is really about, and that's where we come in. You know, I write 2 newsletters a day, and the way that I write is the way that I do things. I don't want to write books on what I'm thinking. I want to write a newsletter with highlight points, bullet reasons why I like a market, don't like a market, graphs in the newsletter, and reasons behind what I'm doing, fully explained. Then I use my morning video to bring out the chart and walk my subscribers right through what I am saying. Buy here, sell there, here's your stop. Where do you go? I cover all these markets. So if it's something you might think you'd like to see, between what the Linn Group is offering and what I offer, all you need do for free is go to our website, www.iraepstein.com, look at the keyword free offerings. Amazing. And take it from there. If you want to learn, go to my education area. I recommend you take that Bollinger Band course. 13 chapters, each about 5 to 7 minutes long. You're going to look at them in a way you've never looked at them before. I think. I don't know. I'm Ira Epstein. You have a great day, and I'll talk to you tomorrow.